station, your voice. All things Cayman, one radio, many people. This is home.
Radio Cayman in the Cayman Islands.
Live from Radio Cayman Studio, this is
Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense, presented by the CFA Society of the Cayman Islands. I'm your host, Amy Hubble, and I am thrilled to be joined in studio by Monique Frederick, the head of asset management at Butterfield Bank and former CFA Society president. Welcome, Monique.
Thank you. Welcome. And a pleasant good morning as well to your listening audience.
Pleasant good morning to all of us. Now, January is usually the time that we kind of come up with these New Year's resolutions. And unbelievably, we're almost at the end of January, right? I mean, we're 3-4 weeks in already. And I know as January comes to an end, a lot of those New Year's resolutions that seemed so easy to do at the end of December or the first day of January maybe have either fallen off or never got started. So I think now is probably a good time to talk about some of those resolutions, especially financial resolutions, which I think people usually say that financial resolutions are the number 2 most popular resolution, right behind getting healthy. And I think we were even talking about some of our own resolutions before the show, and a lot of them were surrounding getting healthy and that kind of realm. But a lot of people, I think, make resolutions in terms of getting invested, starting a budget, just getting their finances in order. Did you make any resolutions this year, Monique?
Yeah, I think I'm in the same camp as most people, which is the health and fitness ones come first. And then maybe you have sort of the education career goals, and you may have some of those, emotional well-being type resolutions, like spending more quality time with friends and family. But no, you're right. The resolutions are, it is January, and that's where the focus is. And, today what I would really like to focus on is, yes, it's fine. It's those resolutions and goals that lead to financial well-being, right? And while I know there are probably members of the audience who may be very well versed at investments, I would really like to focus on those individuals in our community that are either they haven't started or, they think that investments is not for them.
Yeah, absolutely.
And, just to think about it, right, and we were talking about this before the show, I mean, last year really was a phenomenal year, right? U.S. stocks were up
30%,
nearly.
right.
Exactly. And then for the last 12 years, the markets have been up. So you would have, whatever you put in, you would have taken out more if you've been invested for the 12 years. And, I did a quick calculation the other day. If you'd put in $10,000, right, in the S&P 500 12 years ago, it would have been worth $57,000 today.
Wow. Does that count the month of January, or is that to the end of the month?
So that would have been, I know, right? And that's an interesting point that you bring up, because most people have been worried, right, over the past year. I mean, they've been worried all along, but we have great examples in January where they're worried about, well, markets will go down, so maybe I should wait, when
people
markets
seem to be worried all the time. They're worried when the market's high because they think that it's about to crash, and then they're worried when the market crashes that it's going to crash more. It's like people are just always worried, and I think kind of you and I take the path, and even before the show we were saying, man, it is hard to be in investment management this week just because it's those questions is now the time? And the answer is...
The answer is there is never a good time or never a bad time, right? It's really, there's never a perfect time, let's put it that way, because whether in your 20s, your 30s, your 40s, whatever the age is, right, either if it is because you're waiting to say maybe when I have more money, or maybe when the market is down 20%, or when I have that extra savings, that's when I'm gonna get started. And I think the main point is that you can't achieve a goal if you don't take a first step, right? Exactly. Whether even if it's a baby step, right? But taking that step. And for your listening audience, I mean, this might be a very good example that, did some rough calculations. Like if you invest $1,000, right, and then add $100 to that every month, right, for 25 years, and you assume, let's make an assumption that on average the markets return about 8%, let's say, right. In those 25 years, at the end of the 25 years, you would have nearly $100,000. Now, if you wait and you say, I'll wait 10 years, when I have a bit more money, I have maybe a better job. So instead of starting with 1,000, I'll put in 10,000. But now you only have 15 years, right, to get to that same 25. And you do the same thing. You add $100 every month. At the end of that 25 years, you end up with $65,000. So in the first instance, you were nearly 100. The second one, 65,000. So I think the main point of the story is...
So most of that is compounding. It's not even as much as what you've put in as much as
exactly.
that what you started with has compounded it. And it's just through time, right? I think of it a lot of ways in terms of like families growing. It takes generations to grow a family, but it can start with two people. And two people can create, depending on how many children they have, and then how many children those children have, and then how many children those children's children have. I even read a stat yesterday that said it took us 200 million years to get to 1 billion people on Earth, and then it only took us 200 more years to get to 7 billion people. And that's, I think, the power of compounding in terms of investing that I think people just don't always grasp. They think of it in a short-term time period, or they think of what stock do I need to buy today that's gonna blow up and I'm gonna get rich within a month or in 6 months or in a year. And it's not necessarily how you build that wealth that way. It is through that just regular automatic savings to yourself that's going to compound over time.
Yeah, and I think the main message just from that story is that it's better to start early with a lower amount than start later with a larger amount.
So you're saying we should start today?
Any day.
Any day.
But today, it's a resolution, right? We have to get started.
So even if it's January 27th, we don't have to start on January 1st. You don't have to wait till next year to get started again. It's not too late. It's not too late. But I did see a stat that there had been, I think the pandemic had led to a lot of new investors, and we heard a lot of the nonsense through the meme stocks or the game stocks and the Robin Hoods of the world. And there's now 25 million new investors in the last 2 years or so from the pandemic, which they're for the first time, even just this month, kind of seeing their money go down. I mean, same kind of in the crypto markets. Like you see these markets going crazy, and you're like, lots of people around you are getting rich, or at least you hear it and you feel like everybody's getting rich, but you. And then, like, obviously, months like January comes around, and you're down. I don't know what crypto's down, but you're down 10% on the equity markets, and that can be discouraging, I think, especially for somebody that's a new investor. What would you say to them?
Yeah, no, it's a fair point because, as we said from the start, you've had technically a bull market, things going up for 12 years. Yeah. Right. So if you've started within the last 12 years, you're not familiar with things really going down.
Yes.
And I think, it's one of the points in terms of when you're investing and determining what to invest in. In my mind, there are two main considerations to contemplate. And even for all the new investors, these are some of the things to consider, right? One is, what's the investment time horizon? How much time do you have to achieve whatever the goal is that you're trying to achieve?
When do you need this money?
Right? Because, for example, if you're retiring in 10, 15 years or longer, right? You have an ability. Yes. Yeah, we're not sure when we're retiring. But, you have the ability, to take on more stocks because stocks in general grow over time, and you have, the way to beat inflation.
Yes.
Versus if we're talking about, you need the funds in 5 years or less, right? Then looking at investing in stocks or putting a substantial amount in stocks probably not a good idea. The other thing to look at as well is risk tolerance, right? And your ability and willingness to take risk. And I find the easiest way to kind of assess that for yourself is just to ask yourself the question, if I'm invested in the markets and markets go down, let's say 3-4% today, am I going to be able to sleep tonight?
Right.
Or will I be panicking?
Am I thinking about this? Am I worried about it? Am I calling Amy and Monique and saying, what should I do? That means you're overinvested, probably.
Yeah. Then that means, it's too much risk, right? You've too much in most likely in stocks. So I think those two things are things to take into consideration when you're sort of starting out on investments.
Mm-hmm. All right, so you mentioned time horizon and risk. So once you've kind of assessed those two factors, whether or not with yourself or with a quiz or even just kind of a feeling or talking to somebody else, is it just a matter of choosing your first investment or choosing your first stock, or what do you think?
Almost, but not there. We're
not
there yet.
Okay.
You're not there yet. Because basically, it's like building a house, right? There needs to be a foundation.
Right,
so
right.
Here you need sort of a financial foundation. And part of that foundation would be, it's usually recommended that you have at least 6 months of sort of emergency savings, right? So these are the funds that you've put aside, whether it's in cash or fixed deposit, something relatively safe that is there if you have an unexpected expense or maybe loss of a job, which, we've seen a lot of that during the COVID pandemic. So you want to build that first, right? And then the other item I guess I would say to also consider is if you happen to have high interest rate credit card balances.
Oh my gosh, yes.
Right. You also may want to consider those first, because if you have one that is, you're paying 15% interest, the stock market on average is giving you 8%. You're better off just paying off the credit card.
Yes,
right?
yes, by all means. I see that all the time. People even sitting in cash. It's like they build an emergency fund, but they still have this high interest rate credit card debt. And I'm like, you've got to pay off that money. Like, nothing is going to beat the interest rate on credit cards, just because the rates are 15, 20, 25% sometimes.
Yeah.
And that, just like investments, that's going to compound against you in exactly the same way. And so you've absolutely got to get that credit card debt paid off. And I like your allusion to building a house, in terms of you can't just put a roof on a house if there's no foundation, if there's no walls, if there's no roof. And so buying stocks, and especially buying stocks that are just fun for you, in terms of buying buying high flyers or buying crypto, I kind of think of that as maybe even after furniture, maybe just a very fancy appliance in that point. And then it's once the house is built, that's what you want to focus on first. You can't start with buying a couch and just put it on the street. That's not something you can live on. You've got to have that. You've got to have that foundation. You've got to have those walls. You've got to have the roof. You've got to have the furniture. You've got to have a house to live in, and you can kind of play with some of these things.
Correct.
And
yeah.
that seems to be, especially in the last couple of years, at least for me, a conversation that I cannot have enough times. And a lot of times I hear these people just like, you don't get it, or the crypto's changing the world, or anything else. And I said, maybe not, but you absolutely have to have that foundation built before you start adding on to it.
Yeah, no, I certainly agree with that. And all the other asset classes, they all have their place. Sure. But before you get started, as you said, you do need to have some financial foundation.
Yeah, and we should come back to that after the break in terms of asset allocation, because you don't just want to buy one stock or just be in one country or something like that. We do want to diversify. So let's take a quick break, and when we come back, we'll talk more about how to get started with investing and budgeting for the new year with Monique Frederick.
We give you honor and praise, adoration and glory.
Radio Cable.
Praise time.
Praise him, praise him. Come on, let's praise the Lord. Come on, let's praise the Lord. Praise him in the morning and in the evening. Oh, let's praise the Lord.
Praise time in the morning.
Praise him, praise him.
Weekdays 6 to 6:30 a.m.
Radio Cayman, waking you up.
Rock my soul in the blues of my favorite. Rock my soul in the blues of my favorite.
Praise time.
I know he cares. He'll always be there. Oh, yeah. Praise him, praise him, praise him.
Praise time.
Set your clock for 6 a.m. or you will miss it. This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
All right, welcome back to Money Sense. Today with Monique Frederick, the head of asset management for Butterfield Bank. We are talking about New Year's resolutions and how to get started with investing and getting your finances in order. Before the break, I think we talked about, before we buy that first stock, things that we need to be looking at in terms of building out an emergency fund and paying off our credit cards. But once you are at that point of investing, you don't just want to buy one company or just put all of your risk into one company or one country, right?
Yeah, no, you're absolutely right. It's all about, a word that's used quite often, diversification. It's about making sure you don't have put all your eggs in one basket, right? We've seen it with markets very recently. A stock that may have been sort of a high flyer and has excellent performance.
Peloton.
Yeah. Peloton was one. Netflix was,
right.
These are names that everybody knows. And then all of a sudden, they go down a lot more than expected. It is about making sure that you're diversified. I mean, we talked a little bit about stocks. There's obviously bonds, there's cash, there's, fixed deposits there. And then you have sort of the alternatives, whether you're looking at things like commodities or gold or hedge funds and then the one that comes up a lot in conversations, crypto.
Yes.
So there's all of those. But I think it's really, going back to what we discussed earlier, where first you're trying to see what's the risk appetite, what's the time horizon, and then based on that, you then look at, okay, how much exposure should I have to these various asset classes? Because obviously they all have a different risk-reward profile and different volatility. And
well, how do you know that though? If you're just a regular listener, out on this, just on Google, you're on Yahoo Finance or something, you're just kind of Googling around. How do you kind of look at stocks? And a lot of times I say, you need to do your research on stocks, but a lot of times, people may not know how to do research on stocks or who to talk to in terms of how to get started.
Yeah, so I think, there's a lot more information out there these days, right? And the whole
which can be good and bad.
Exactly. And the whole investment landscape, it has become a lot more accessible. There are all these trading apps that are out there these days. So I think in terms of deciding, because sometimes the question that individuals may have is, okay, do I do this myself or should I seek financial advice? And what I would say is that, if you enjoy making investment decisions and, you may consider buying an index fund or...
What's an index fund?
Well, a basket, a basket of stocks. So one that's used a lot and referenced a lot is the S&P 500, right? Okay. So let's say the 500 top companies in the U.S., the easiest way to explain it. So it's diversified because there's 500 companies
stocks
in there, right? So that may be one way of getting that exposure. Sometimes if you don't have the time and, you don't want to be monitoring it, another way may be to go into a mutual fund if you're starting out. And then if you really are not sure, what to do, where to start, then I would say you should definitely seek financial advice and financial guidance. What I've also seen happen sometimes, which for those individuals that may have a larger amount, let's say, to invest, is they may have a portfolio that's managed by an investment professional, and then on the side they'll have a self-directed account, which is one where they're trading a lot, and investing is a hobby.
Yeah, they're fun money, right?
Exactly. So there are different ways to go about it. In terms of the research and everything that's out there, looking at how the investment landscape is changing, and we were talking about sort of the meme stocks and different types of trends that are taking place. There's a positive and a negative side to that, right? So these days, financial advice is being obtained in a way from whether it's influencers or celebrities or, bloggers that may be on YouTube or TikTok. And on the one hand, it improves financial literacy, right? That's certainly a positive. More people are familiar now and understand maybe a bit more about what's out there. On the other hand, I would just encourage individuals to be a bit more careful, a bit more aware, because, aware of potentially scams. But on the other hand, the traditional model where investment professionals are licensed and registered and they have certain fiduciary responsibilities, which the individuals that may, they may just be a celebrity or they may be an influencer not coming from the investment industry at all. And while I think the fact that they're talking about it is great for financial literacy, but they don't have a fiduciary duty, right? So there are not certain regulations that they need to follow. So it's just trying to be a bit more careful in terms of if somebody comes out and says, put all your money in this particular stock or one stock, that's just that's danger right there, right? So
yeah, I agree 100%, and I especially am so excited about technology and the platforms out there that now give, it really gives access to anybody that wants to invest, where that has not been the case. And even index funds and ETFs and the ability to build a well-diversified portfolio and to do it on your own right now in history has just never been this way. In the past, you would have had to have your own stockbroker, and you really would have had to have mass amounts of more money in terms of actually having access to the stock markets, access to the public markets. And so I am such a fan of just the ability of the entire population, at least the opportunity to have access to the markets at a very low cost. But exactly what you're saying, there are so many risks. I've been there's this commercial in the States, and I was home for Christmas, and so I kept seeing it between the football games and everything. And it's Matt Damon, and he's just walking around all this space equipment, and it's very well produced, and there's a lot of powerful music, and he just looks in the camera, and obviously this is, I'm sure, an Oscar-winning just actor, and he's like, fortune favors the brave. And it's like crypto.com. And I'm like, oh!
Yes.
Again, not that I'm against crypto necessarily, but it's so far past where people need to get started to. And so that's exactly what you're talking about as you see these celebrities. I mean, why are you taking investment advice from Matt Damon, who's...
Yeah, I mean, a lot of whether it's the companies, the websites, the new, the new trading platforms, are obviously using celebrities in terms of promoting what they're doing. And as you said, I mean, there's nothing wrong with
even
innovation.
The Elon Musks he's on social media and tweeting all the time, this crazy stuff. We have so much access to people.
Yeah. And I think, but I think with every new trend or any new, any innovations, there's always going to be a time, right, for this to work itself out in terms of, there's always risks. There's always, you're going to have a certain percentage that could be a scam. And so it's just really treading carefully, right, and getting to understand that.
Yeah, and I would encourage, I have the conversation, at least here in Cayman a lot, in terms of people view kind of the traditional stock markets as something that they don't really understand or intangible versus, say, real estate. And real estate obviously is a great investment on this island. We know that we're growing rapidly. We obviously have seen real estate prices through the roof, but a lot of times I just try to bring people back to earth about the difference in investing in real estate, which is almost like, I mean, beyond your house, you absolutely want to invest in where you live. But investing past where you live, that's really like running your own business, right? I mean, you do have to pay stamp duty. You do have to pay for when things break. You have to sometimes pay management company. You have to get renters in there. You've got to, if the house floods, these are all things you kind of have to take care of versus investing. There's none of that.
Yeah, I guess, real estate in terms of, where it's like a rental property, obviously there's certainly a lot involved with that, as you mentioned. And then, some are doing it for the income. Some might be doing it just for, the capital gains, being able to sell it.
Just people seem to be able to understand how they make money in real estate a lot easier. And so how do we kind of pivot, not to say that investing in real estate isn't a good investment necessarily, but how do we kind of promote traditional investing as more understandable, I guess?
Yeah, I think the fact that it's one that is becoming more accessible is helping, because I think there was a perception that in some cases that, investing is only for a certain group of people.
Exactly.
Like you need to have a certain amount of wealth before you can even get started, which is not the case, right? So I think that's part of it. And then in Cayman, we just, based on what people have seen, and they may have seen that around them or from family or others, there is also a perception that real estate prices will go up forever. Yeah,
that real estate never goes down.
Correct. So, there is a place for real estate in terms of an overall investment portfolio. I think the main difference as well between the two, I think, to focus on is liquidity, right? Because when you need the funds or when you need something, you cannot easily... Now, the last year in Cayman has been exceptional. So,
yes.
But in general, it's not a case where, you can just easily liquidate and sell whatever the property may be because you need
you can't
the
sell
funds.
and have cash in 2 days like you can with investments.
Exactly. And so I think it's, the goal here is just to make people aware that it is accessible. It doesn't have to do with, I need to be Warren Buffett before I can start investing, right? It's about starting early, even with a small amount. And in the long run, yes, there's volatility and things go up and down. But in terms of in the long run, if you look at the figures, you would see, right, that it's in general an upward trend.
Yep.
Right? Not in a short time period, but over the long run.
Yeah, there's never been a 10-year period that the stock market has not returned positive returns.
Yeah, and I think, and I know we're getting close to the end here, and I think one of the things that I would really like to get across to the listening audience is that investments are an essential tool to the road, on the road to financial well-being, right? And it's just like any other resolution and any other goal that we may have. It's typically not a straight road, right? It's a windy road.
Yes, very much.
And in Cayman, we're actually should be very used to this because we have lots of roundabouts. And yet we still manage to make it home every single day, right? We don't get stuck in the roundabout going in a circle over and over.
That's
so we
right.
still manage to make it home. So I think it's about really getting started and focusing on, you're trying to get home. You're trying to get to a specific end point. And it's not going to be a straight road. But if you stay committed, you'll get there.
Wise words. All right. Well, Monique, we are out of time, so thank you so much for coming on. I know you've been on with us a lot, and we are always just so pleased for you to come. As a final note, we wish to remind our listeners that a rebroadcast of today's show can be heard as a podcast on the CFA Society Cayman Islands webpage, as well as on all your favorite mobile podcasting platforms, and encourage anyone who has a question or topic that they wish us to cover to please tweet us at MoneySense Radio and join the conversation. With that, thanks again, and please tune in 2 weeks' time.